Hello traders, it's been a while since I've done my last daily overview video, and this is therefore the first attempt since a long time. And here I will add as I speak the details of this count on the Australian dollar. And I believe that wave 2 on a larger degree had just finished, and about a few minutes ago I have updated my report on the website, and although I was missing those waves, I missed to present them on the chart. So what I expect that after the break of this trend line, the momentum has changed. We have the 14 period RSI on the hourly chart diverging with the price chart, and I believe that this break to the downside will continue to much lower levels. We need of course prices to break below those this moving average, the 55-hour moving average, and the low of wave 4 to gain more confidence in this count. I'm gonna go to the 4-hour chart to show you. This is the previous chart that I was examining before, believing that this is where it ended, and it turned out that we had another new a new high here, so I adjusted the waves to allow for this high, and this is the existing count for wave 2 here. And if we draw Fibonacci retracements here to wave 5 here to the downside, we will see that again the 50% retracement of this move was very important for the Australian dollar, and prices were rejected again here, and the downtrend has started in our view, but we need lower prices to get more confidence that in this higher time frame the pair is actually heading lower. This could be considered also as a double top, another bearish pattern. We also have this two candles here that I have to look closer to see if they represent a dark cloud, but it seems that this is an important top for the Australian dollar. So I'm gonna go forward to the euro, another currency where our expectations were fulfilled. I'm not gonna show you this with lots of alternatives here. Actually, let me show you that. I believe that this was wave A, this was wave B, and now we're looking for an impulsive decline that will bring prices to much lower levels, approximately near 109 or 108 in the longer term, to have an ABC here for our larger picture here on the daily chart, because I believe that this is a triangle, a very long and big triangle, ABC for A, ABC for B, WXY for C, and now I expect here A, B, and C prices to go much lower, and why not the level of the X wave here, which was at 0820, 0830. Those are very good levels. 0870. This level here should provide support, and I expect that level to hold for wave D. Then we will have an ABC bounce for wave V, but wave V can be very small in size, and again after breaking below the 144 day moving average, I believe that the pair will experience difficulties to move back above it, and probably after the break and the low here we have an attempt to move above it. It will reverse something like that lower, and we will have an attempt to move higher, which will be approximately to the level of this high here at around 110, 111, between that level. This will provide resistance, and then we will have the completion of wave 4 and a continuation to the downside in an impulsive manner. All these moves will eventually happen until the end of this Thursday, when the outcome of the Brexit referendum will hit the wires. And I don't know what will be. I don't want to make a guess on what will be the outcome of the referendum, but I believe that the reaction of the market will be to the downside. I don't know if the Britons will decide to leave the Eurozone, the European Union, but the reaction of the markets will be, according to my analysis, will favor the US dollar. And now let's go to the 1 hour chart. Yes, this is what we see in the lower time frame. I can count 1, 2, 3, 4, 5 waves to the downside from here, and I believe this is the first wave of the decline. And then I see this as, although there are alternatives for this count that would favor, for example, this being wave 1 up here and then an ABC, but I prefer this count, which suggests that here we have an expanded flat like that, A, B, C. It fits very well into a pattern of an expanded flat, and it wouldn't be it doesn't fit very well this to be wave 1 in terms of of how deep this wave 2 retraced. It looks better here. It just a few pips above the 78.6 retracement, but anyway, in both cases, whatever the correct count in the internals of those moves, after the break below the 113, prices are heading to much lower levels, since I expect this wave to be a wave 3 to the downside, unless we have a much more complex correction here. But if the scenario of the expanded flat is correct, then prices should accelerate from here soon, and if it is not correct, and if this is an ABC, then there is a possibility that we'll have an extension of this wave 2 with more ups and downs here for a more complex wave 2. But I believe, again, I believe it will continue to the downside for now. Going to the next, to New Zealand dollar, to the next pair. It was this was another case where we were fast and wrong to believe that this was the top. Although if you see our last week's reports, we started the previous week with this being wave 3, waiting for another wave up, but this kind of a decline misled us, and I started counting this as a wave 5, but anyway, prices continued to the upside. They made a new high, and now I'm considering two alternatives here. The one is that this was wave 4, and then we have ABC for 1, ABC for 2, ABC for wave 3. This is ABC or something here, a very choppy price action for wave 4. and this will be therefore an ending diagonal, and this could be A, B, C, and wave 5 being completed up here. That would complete, of course, wave 4, and price will move lower. But in order to be more careful here, I prefer to see prices moving below this wave 4 before calling this a complete move. Of course, there is an alternative here, that this is ABC, 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 and therefore this is a triangle that ended here wave 4, and then we expect 5 waves to the upside. But again, if that's the case, then we'll probably have 1, 2 here, and if price is reversed below this level, this will invalidate that count, and therefore the most important, the key level for the kiwi is 0.71 here. We need price to break below that level, and that would signal the continuation of the downtrend for the kiwi. Moving forward now for the Canadian dollar, we saw the expected bounce from around the Fibonacci level 78.6, and we have the first break of this SMA, which is the first sign that we have a bullish reversal here. And we also see the 14 period RSI diverges with prices, and we need a break of this SMA to the upside in order to gain more confidence for the continuation of this rebound. This low is important for this scenario. Moving forward to the Swiss franc, very choppy price action these days. We see that the pair has kept trading within this range, up and down. All the SMAs are crossing each other several times, which reflects market participants' indecision towards market participant indecision at current levels. They don't know if it is a buy, if it is a sell, so they're constantly changing opinions. Also, the volume is very low, so especially after a lot of brokers have increased their margin requirement, that contributed to a very large decrease in volume. But again, I can count here 1, 2, 3, 4, and 5 in the form of an ending diagonal or something here, and probably this is a good start. But unless we see a break out of this range in other way, I cannot be sure about the correctness of this count. I prefer the bullish side, so I'm expecting prices to bounce and break above this level, but I need to see that before becoming very bullish for this pair. Approximately the same holds true for the Japanese yen, who is threatening the long-term analysis. I have written in detail about that in the weekly report, which you can find on our website. And if this is indeed a truncated wave 5 in this 1, 2, 3, 4, 5, which confirms the divergence in the 14 period RSI, then this rebound, which already brought prices above those two SMAs, may be a very important low for the pair, and prices may continue to much higher levels without revisiting these levels here. So before becoming overexcited about this rebound, I would like to see a break above this SMA, which is also a break below this above this trend line here. You can see how this trend line is putting pressure putting pressure on the pair for now. We need to break this trend line to the upside to gain more confidence in this bullish count. Otherwise, we may see a continuation to the downside, which, as I said, may lead us to make significant changes to our broader outlook for the pair. Moving on gold. And here also a lot of changes we made a lot of changes this week with our weekly review on larger time frames. We initially believed that wave 1 was ended here, and we had to make some adjustments up here because this bounce from the reaction on this intersection of the SMAs on the weekly chart and the RSI does not play very well as being the beginning of a new bull trend. So we'll look back in time into those waves here, and we decided that this picture fits better, and again we have an expanded flat here. And in other ways, this final rebound was wave 5 of wave 1 or wave A. This could be wave A of a correction within this could be, for example, we may have A, B and C for wave B, and then back to below 1000, but this is very long term to discuss it here. Anyway, looking at the 4-hour chart, we see a break below our wave 4. We see a break below this low, we see a break below this SMA, and everything points to and this very negative slope in the RSI all of them point to lower prices for gold, which usually mean higher prices for the dollar. And the first target for now is the level of the 144 SMA in the 4-hour chart, which is currently at 1250. That's a good target for this bounce. Prices have to, I'm moving on the 1-hour chart to see it more clearly. This is where this is the 250. We see the importance of the level. This is the top here. So this target is probable. We need prices to stay below this. Let me remove this retracement here to make it more visible. We need prices to stay below those SMAs and more importantly below this high here. And the first target is this high here, and of course thereafter we have a continuation up here to 1220 and so on. I'm going now to crude oil. Crude oil continued to made his bearish reversal earlier today, and we've been warning about it since yesterday, that since prices reach this high here, although this is nearly vertical move, we believe that it is an ABC move, which means that this move is corrective and not impulsive. We had the initial state that prices broke below the 21 period SMA, and now they're facing strong support by the 55-hour SMA, and we have a bounce. The previous attempt for a bounce was limited by the 21 SMA. We want to see how it will play out the second attempt. In this second attempt, if prices touch the SMA. Overall, we expect the reversal to continue to the downside. The RSI is badly directed. We have a bounce that is now facing the neutrality level of the RSI on the 14-hour RSI. We see here how the rebound is facing the neutrality level, and this will hold eventually, and we will have a continuation since this slope suggests that the momentum is bearish, and lower prices are ahead. Let's go to stocks, and I'm gonna go first for the DAX. A very strong rebound. I really didn't expect such strong rebound on DAX this week, but I've made a lot of changes in the count on DAX last week. In the weekly report, you can read more. This week's report, you can read more about it. I'm not considering this as an ABC that I did here anymore. I'm looking at this as an ABC, a WXY, which means that prices need to move below this low, or at least at this level here of the 50% retracement of this huge wave 3. And if we have a break below this level, we eventually gonna hit this trend line here, this lower part of the channel on the weekly chart, which coincides with the 61.8% retracement and the high of this wave 1 or wave A. I don't know what it is in a much larger time frame. But overall, that means that I'm expecting a continuation to the downside. The rebound, however, is very, very strong, and it has broken above the 21-week SMA and is now facing the 144 weeks SMA, which must hold if this new count is correct. I'm going lower to see what's going on. Again, these SMAs are all concentrated at the 10,000 level, around that level, and this level must hold the bulls. If if prices break above this level, then I have to reconsider the whole count, and I will become bullish again on the German index. But for now, this is the count I'm expecting. I see this as a correction, a complex correction, and this 1, 2, 1, 2, and a continuation to the downside I expect to follow. For now, we see the DAX flirting with the 10,000 level. This is a very important level in several time frames, as I showed you before. If I draw a Fibonacci retracement of this last move, we see that this is also the 61.8% retracement. We see here how the 14 period RSI is diverging with price chart, and we expect that prices will reverse lower from here. For now, however, the 21 period 21 hour SMA is supporting prices. We need at least a break of this SMA, and of course, for being more careful, a break of this SMA to gain more confidence that this is the correct count. The resistance of this low here and this level here should remain in during this attempt here. If it is broken to the upside, and let's say if we hit this 78.6 retracement or even higher, we'll have to delete this count and go back to a more bullish one. Let's go on the S&P and see how those two indices correlate. If they do, yes, this is the 1 hour chart. I'm not gonna go. Okay, let me fastly show you what I expect here. On the daily chart, I am counting 1, 2, 3, 4, 5 waves from the from this level here. So the important wave 4 is already set here, and I believe that we need a bigger correction in the S&P, and after it is complete, we will continue for our fifth wave green to much higher levels in the future. As we can see here on the weekly chart, we will probably have to test this upper boundaries of the channel, possibly to much lower levels in the coming months. But also there are a lot of possibilities. I'm not gonna discuss them here. Going into the lower time frames, the 1 hour chart, we see 5 waves until this level. Then again, this could be an ABC, or this could be 5 waves until this level here, and then ABC. In which case, in which case, excuse me, in our primary scenario, this level here is a 50% retracement. If this whole drop is wave 1, then it's 61.8% retracement. So whatever the correct count, prices are expected to find strong resistance here, and if the count is correct, price should continue to the downside. Also, I mentioned earlier today about a bearish flag forming here, and it was actually broken, and now prices are testing the flag from below. This is a level of strong support and resistance, as you can see here in several times in the past, and I expect a continuation. A continuation to the downside for the S&P will likely drag the German DAX lower, and that's why I am still bearish for the German DAX too. That pretty much sums up all the instruments that I cover at snail-trading.com, and I hope you will have a profitable week. Be alerted for the Brexit. It is indeed an event that will bring a lot of volatility on the market. Some market orders may experience large slippages, so try to keep your account safe. Have a nice rest of the day, and see you tomorrow.